Welcome to Markets Now. I'm Michelle Rourke with Brian Splitt with agmarket.net. And we have all the grains lower after the August WASDE report. And Brian, let's unpack this thing. We'll talk about soybeans first because that's the bear market leader here. We had an increase in yield, production, harvested acres, and ending stocks. So pretty bearish across the board, right?
It was, and so soybeans really have been the leader to the downside recently, and based on this report, they're likely to continue to do so. Multiple fronts of bearishness. Number one, trade was looking for an increase in yield, and it got it, and a little bit more than expected. So we're looking at a record national average of 53.2 bushels per acre. And alongside that, the harvested acres for soybeans went up about 1 million. And so that went up. The corn harvested acres did go down about 700,000, but this has the stocks ballooning on new crop estimates from 435 million bushels to 560 million bushels. And so that is going to be something that's going to be tough to claw back from.
No doubt. That's 125 million bushel increase from last month. Talk about the harvested acres. Where did they come from? I mean, that's a big switch, 1 million acres up. And a lot of folks up here in the Western Corn Belt we're talking about with the flooding, they thought harvested acres would probably go down.
Yeah, so you try to reason how that came to be, and potentially some of the areas that were wet during planting or flooded out during planting. Did we see any of those acres go into beans late? To get something in the ground? That's definitely a possibility. You saw almost an even exchange, not quite, but corn acres down 700,000, bean acres up, what was it, 1.1 million. So, we did lose about 400,000 acres in between the two. But that would be my first guess. Again, I'm just guessing shortly after the numbers come out, but that's how my brain would reason it.
Yeah. We also saw an increase in world ending stocks too, didn't we?
We did, yeah, and so up 6.5 million tons on soybeans. And again, that's a big part of that is coming from our domestic supply increase, right? So the stocks to use for soybeans on a world basis grows. That's going to continue to be something that's going to pressure the market, and so. The problem with beans, and again, I look at things on the chart quite a bit, and we've warned for months about what it would look like if we had front month beans get below $11. And the August contract did that, and we are in delivery now. September is going to be the front month now moving forward once August expires. But once we got through 11, we went into the low 10s very quickly. Now we have September and November beans below $10. And the continuous chart just historically suggests when you spend several years above $11, and then you make the move to below 11, you're likely to see a test of the low 9s to the upper 8s before things really catch.
And you're basing that on analog years, which 14 is kind of what you're basing that on?
Yeah, really the analog comparison to 2014 didn't begin in 2014 or 2024. It began in 2020. Okay. So we've been tracking the price action of a decade ago since 2020, comparing to 2010. And that goes for both corn and soybeans. And so I will say that just from a pure price standpoint, beans are a little bit lower than they were at this stage in 2014, while corn is a little bit higher than it was this time of year in 2014. But from a price action standpoint and a timing standpoint of when we're kind of making new lows, when we're consolidating, when we're bouncing, those time frames are still pretty close to 2014. And so what that would suggest is that in general, we still have probably about 6 weeks of a grind lower for both corn and beans as we get to the end of the quarter.
Yeah, and the problem is we still don't have the exports on the demand side. That's problematic as well there, isn't it?
That is the main issue for soybeans. Again, the crop getting bigger is something we've been talking about, but when you think about what China has done and how much U.S. soybeans they've purchased, we're running behind the 3-year average, the 5-year average, however you want to measure it. And so as we get into the new marketing year, which we're not there yet, but we're less than a month away, we're going to really start looking at the pace analysis of our exports. And so we did have some export sales last week. We had a flash sale this morning, but we need to piece together more than a couple 100,000 tons here and there. We need to start seeing some of these bigger sales where China comes in and buys 600,000, 800,000 at a time, and they haven't done that yet. So as USDA gets into the beginning of the marketing year and they say, okay, we need to be selling this much to hit our goal, but we're only at this much, that pace analysis would suggest that in the future, USDA is going to have some work to do on our soybean export assumptions.
Absolutely. So let's break down corn, Brian. Yield went up, production went up, but we got offsets with harvested acres. And so talk a little bit about what we came out with on the balance sheets for corn.
Yeah, so first of all, the old crop corn balance sheet did get a little bit tighter by 10 million bushels. And so that 10 million bushels then carries into the new crop balance sheet, reducing our assessment automatically by that 10 million. So we had the yield go up, and so we're now at 183.2. This would be a new record for corn yield. I'm sorry, 183.1.
Right.
But that is a new record, and that's about almost 6 bushels per acre above our current record for corn. And so the problem there is that generally when you see the USDA go from a July yield number, which in most cases is still going to be trend unless there's some major concerns early in the growing season. But when they go from that July yield number to a higher number, that then kind of sets the stage for that conversation of big crops get bigger. And then the market will likely believe that incrementally the yield will go up in the next couple of reports. So again, it's going to be another month until we get the September WASDE report, but we're likely to see assumptions going into that report unless there's something late season here that really changes our thought process. That 183.1 will likely go up, a couple tenths of a bushel here in the next report, and we should see the carryout go back up a little bit next month. And then, of course, we've got that quarterly stock report at the end of September, which is going to be the true carry-in from old crop.
And we should also talk about the fact that, we still have a lot of old crop that needs to be moved before we go to harvest for this new crop. And the other dynamic is that farmers are selling here against the funds, which have also been selling here, right?
Well, the funds have been very short.
Anyways.
The funds have been very short, but what we saw in the commitment to trader data that was released on Friday of last week was the funds actually covered a little over 50,000 contracts of their short position. Now, that was as of last Tuesday, but the market didn't go up. And so that's something that we've been discussing is the funds don't have to be the seller to take this to new lows. And historically, they will actually be covering their short position as that last bit of old crop comes to market. So the funds don't have to be the seller right now, and they're not going to be. They're going to be covering their shorts as the producer brings their old crop to market. And the problem is we have more old crop that the producer still has to price than what the funds are short. And so that is likely going to be an issue that's going to nag at the market here. We're going to have the September contract go into delivery later this month, and that's another period where the market has bushels that are going to have to be priced. Or decisions are going to have to be made. Do you start, accumulating storage fees on it? Do you, because you're going to have to free up some bin space here. You have a whole new crop coming out of the field here very shortly. So, and there's still interest being paid on this money. So how long does the producer want to hold on to it? How long do they want to pay interest on it? So these are things that are still going to come to a head in the next couple of weeks.
So, Brian, do you think because we didn't get any price movement, like you said, as the funds were covering shorts, does that mean that you think we're going to leak lower like we did in 2014? I know our low there was what we say, 318 was kind of the low at that point.
Yeah, 318.25 was low in 2014. And again, corn is holding in from a price standpoint a little bit better than 2014. Beans are lower than they were in 2014 at this time. So it's hard to pinpoint a bottoming price, right? But it may be more of a timing thing. One of the commonalities between the analog comparison 2014 for corn and beans, and then there's an analog comparison for wheat, which is 2009, which is tracking tremendously. Fascinatingly, the common theme is that regardless of which year, which analog you're looking at, they all have the market continuing this downward slide into the end of September, early October before bottoming.
So on the wheat, we actually did see the most constructive numbers today in the WASDE on wheat. Production down 26 million bushels, harvested acres and ending stocks were also down. Was that a surprise to you at all?
Uh, no, I mean, I don't spend a whole lot of time analyzing the wheat balance sheet, to be honest with you. So I try not to use the word surprise. It's try not to be surprised by anything because I mean we've seen crude oil go negative, right? So uh, anything in the market should not be a major surprise. As far as the stocks go, it's constructive in the sense that both corn and wheat world numbers were a little bit tighter month to month. Um, it, was it bullish enough to bottom the market? I don't know about that. Again, I still think that you have a general weakness coming into the end of the quarter for wheat, but we're going to continue to monitor the charts. And if we start taking out resistance, then we'll have to pay attention to that. But even with this corn report, and I know, earlier after the numbers, everything was lower. Corn has since turned a little bit positive.
Okay.
We're going to have to keep an eye on the last swing high on corn was 409. We're going to be looking at the 555 to 560 area on the Chicago wheat in December. And we could start taking out some of those last swing highs after a report like this, and maybe we're going to see a little bit more aggressive short covering. But until we start taking out some resistance, we have to realize, I mean, bounces are going to come here and there in a bear market, but the trend is still down.
Yeah. So even if we close higher today on corn and have a little bit of a bullish up day, you're not going to read much into that then.
No, I mean, one day is not going to change my opinion. If we were to have a major reversal today and take out last week's highs, then I'll pay attention to that. But we're going to have to get through 409 December corn in order to do that. So I think it's likely that this market's going to be retesting some resistance around 403, 404. We'll see if we can get through there, but 409 is going to be kind of a line in the sand here in this bear market. And if we can't get through there, then the next downside objective is going to be to check the 380 area.
Okay, well, not a lot of good news here today, unfortunately, for folks. But thanks for joining us, Brian Splitt with agmarket.net. That is Markets Now.